So the big news going around that you've probably heard is that the Fed has decided to cut the Fed funds rate by 0.5%. But what does that even mean, and how does it affect you and your home value? In today's video, I'm going to explain. So what does it even mean that they cut the Fed funds rate? Well, the Fed funds rate, the easiest way to think about it in simple terms is to think of the Fed funds rate as the benchmark for interest rates across the board. But mortgage rates will typically follow the Fed funds rate as it increases or as it decreases. So then the next question is, how does that affect you and your home's value? Well, it'll affect you and your home's value indirectly, but what it will affect most commonly is it will affect the amount of demand or qualified buyers that are purchasing homes. When interest rates fall, it allows more buyers that were on the sidelines, more affordability, so there's more people that are able to buy homes. When there's more people that are able to buy homes, there's more people that are competing for homes. More competition typically will drive up prices for homes as people have to outbid each other to get into a home that they like. So we know that the Federal Reserve has decreased the Fed funds rate, which in turn should decrease home mortgage rates. That will affect you because it will bring in more buyers, and more buyers will drive up demand for current homes. When that happens, if inventory of homes, the number of homes available remains the same, then prices for those homes and competition for those homes will increase, driving up prices even further. So with that going on in the marketplace, what is going to be happening in the next 3 to 6 months? Well, it's a great question. And first I want to say that when the Federal Reserve released their press conference that they were cutting interest rates, they also released what they call the SEP, which is the Summary of Economic Predictions. And this is their predictions of what they will do with interest rates all the way through 2026. So here's a quick breakdown of what they're going to try to do. So at the beginning of the year, before any cuts, the interest rate was at 5.5%. The first cut, they took it down to 5.0. They have 2 more meetings in November and December of this year. And by the end of 2024, they want to have the interest rate, the federal funds interest rate, down to 4.5%. After that, through 2025, they want to drop it down another entire percentage, which would bring it down to 3.5%. And that's at the end of 2025. By the end of 2026, according to their plan, they want to have the federal funds rate at 3%. So what this means is that over the long term, the Federal Reserve has made their pivot, and they're going to be decreasing interest rates over the next couple years. One thing to note is that this is their predictions, so this is subject to change as what they're saying their goal is right now and the way that they're predicting it to go. However, if something in the economy breaks or inflation becomes rampant or things like that, they can adjust this number, but that is their goal, is to get to a 3% interest rate for the federal funds by 2026. So as you can see, the Federal Reserve is committed to decreasing interest rates for the long term. So what I would like to do is give a 3 to 6 month prediction or market forecast of what the real estate market will be doing in the next 3 to 6 months. So this is September. By the end of 2024, in December, they predicted to have interest rates cut another 0.5% to 4.5%, which means they will be down from the 5% that we're currently at right now. What you can expect with every interest rate cut is that there will be more buyers on the sidelines that have been waiting to buy that will now be available to buy and will be looking into the marketplace. 3 months in advance from that, into March of 2025, interest rates should be around 3.75 to 4%, as they will continue cutting in November, December, and then into early 2025 as well. So with each interest rate cut, basically what it's going to mean, and to not reiterate myself too much, is that there's just going to be more buyers being able to afford more homes. When there's more buyers that can afford more homes, then as I was saying, there's more demand for each home. So typically, in a basic economic sense, when there's more demand for homes, then those prices for those homes will be driven up. Now that sounds like great news if you own a house. And it is, because you do want the price of your asset to to increase as much as possible because that's money in your pocket. The main thing that would kind of counteract all those buyers coming into the market and driving up prices for houses would be if there was more inventory or number of homes available at the same time as the buyers were coming in, and this would kind of wash out with the amount of buyers or kind of plateau or increase at a slower pace than they have been. And to recap, we know what the federal funds rate is, which is what determines the interest rates of basically everything else. Homes, mortgages, cars, credit cards, all that type of stuff is influenced by this federal funds rate. We know how it will affect you and your home. We know that as interest rates decrease, it will allow there to be a larger buyer pool. And we know that when there's a buyer pool in economics, typically that will drive up the prices of the asset that people are competing for, which in this case is homes. And then last of all, we know in the next 3 to 6 months and over the course of 2 years into 2026, the Federal Reserve intends to continue to drop the interest rate, which in turn will affect the market, allow more buyers to be able to afford homes, and ultimately affect the value of your home by potentially driving it up through lots of buyer demand. This is just intended to be a quick rundown of what it means when you hear that the Federal Reserve is cutting the Fed funds rate, how it affects the buyers and demand, which in turn affects your home, and then what the long-term process is for the next 2 years into 2026 for the Federal Reserve. So I hope that you find this video helpful. If you have any questions or need me to clarify anything, please just reach out or ask me in the comments. And let me know how you're feeling about the Federal Reserve cutting their rates. If you have any questions or need anything else, just give me a holler. Thank you.